Hey, what's going on, guys? Welcome back to the channel. If you're new here, my name's Hunter and I make videos on investing and trading in the stock market. So make sure to go down and smash that subscribe button and join the team. In today's video, I'm going to go over some safe and effective ways that you can invest your money in the stock market and show you how you can start investing today to compound your money over time. So I don't know about you, but when I first started looking into the stock market, there are kind of these two different takes on investing, which made it difficult to understand whether or not the stock market was actually a safe place to invest your money, or if it was just a trap where only these big institutional investors or different hedge funds were actually able to make money. You know, if you go on any social media platform, on one side, there will be people telling you that you need to invest your money as soon as possible and that you're losing money by keeping it in a savings account, or something like you need to invest $200 a week so that you're a millionaire by 65 or whatever the age might be. And then on the other side, there's people saying how risky the stock market is and how 95% of all traders end up losing money. So in this video, I'm going to do my best to clear a little bit of that up and show you some safe and effective ways that you could invest your money to help grow your wealth over time. So if you find any information in this video valuable, make sure to leave a thumbs up. It really helps out the channel and it just shows me that you guys are enjoying this type of content. So with that, let's get right into it. So first, I want to address the statement on how 95% of all traders end up losing money. And the key term here is trader, which is a lot different from a long-term investor or someone who's looking to slowly and consistently invest money in the stock market over a longer period of time. The term trader is often referred to someone who is either day trading, which is buying and selling stocks in the same day, or someone who's just actively trading in the short term to try to outperform the market. And there's nothing wrong with this type of trading, as I also like to trade around some positions in the short term, but for people who don't want to be as active or try to learn the technical side of the market, this can definitely be very difficult, and a lot of people do end up losing money as soon as they get started with this short-term trading. But this is definitely not the same for someone who's looking to invest their money for the long term. And even though you might not make as much as someone who's successfully trading in the short term, it's definitely a good way to invest your money and a much better alternative than just letting it sit in a savings account. So the type of investing that I'm referring to involves ETFs or index funds that track the entire stock market. For those of you who are complete beginners, the stock market itself is made up of 4 different indexes. The first is the Dow Jones, which is made up of 30 of the largest companies in the US, like Nike, JP Morgan, Caterpillar, and these types of stocks are often referred to as blue chip stocks, as they're very well-known companies with a large market cap. And then we have the S&P 500, which is composed of the top 500 stocks in the market. Up next is the NASDAQ, which is often referred to as the tech sector, and this index is made up of some of the largest and fastest growing companies in the US. And then we have the Russell 2000, which is an index that tracks small cap stocks. And small cap stocks can be riskier, although they do have a lot of growth potential, as they're much smaller companies compared to some of these tech giants like Apple or Microsoft. So instead of looking for individual stocks to invest in, you can actually invest directly into these 4 different indexes with exchange-traded funds or ETFs. The process of buying an ETF is exactly the same as buying a stock, and you can do it directly through your brokerage, except instead of just investing in one stock, you're investing in an ETF that is made up of a bunch of different stocks and one that tracks the entire stock market. So take the S&P 500, for example. For just $367, you can invest in this ETF that tracks the entire index. Here's some of the different stocks inside this ETF, and you can see with just a couple $100, you'll be investing in some of the top companies in the world like Apple, Microsoft, Tesla, Amazon, and so on. And since the S&P 500 gains an average of 5 to 10% a year, you'll be able to slowly grow your account by just buying and holding ETFs like this. You can also do what is known as dollar cost average into positions like this, and this is where you invest money either every single week or every single month depending on what works for you. And this is because ETFs that follow the market tend to move a lot slower than just individual stocks, so when the market has a pullback, you can build up your position, and all this does is increase the amount that you have invested in the position, which will end up paying off in the long run. And this type of investing is a lot easier than just actively trading stocks, as you don't have to keep up with the day-to-day price movements, and you can just continue to invest your money throughout the year. And even though this might not seem like a lot of money, just think about what your money would be doing in a savings account, considering that the average interest rate is about 0.05%. So an 8 to 10% return in the stock market will end up making you a lot more money down the road. So there's just one example of an ETF that tracks the S&P 500. And I know that there's a lot of them out there. So if you want to check some others out, definitely feel free to do so. But the SPY ETF is just a popular fund that's very liquid, meaning that it's easy to buy and sell on any given day. Now, if you want to invest in the NASDAQ or the tech sector, a popular ETF to do so is QQQ. One share of this ETF currently costs around $310, and this allows you to directly invest in the NASDAQ and some of the largest tech stocks in the market. In just the past year, the NASDAQ has gone on a huge run, and this ETF is up over 46%. You can also see how much the tech sector has exploded over the past 5 years, with a return of over 180%. So if you think this trend is going to continue and tech companies will grow at a quick rate like this moving forward, this is definitely an ETF to consider. And if you wanted to invest in the Russell 2000 or the small cap index, a popular ETF to do so is ticker symbol IWM. Here are the fund's top 10 holdings, meaning what the ETF is made up of, and you can see they're invested in companies like Caesars, Penn National, Plug Power, etc. So there's a few ways you could directly invest into the stock market as a whole by investing in some of those different ETFs that track the entire index. So those are the big ones. Now there's also a few smaller ones that you can invest in that track the 11 different sectors in the stock market. In the market, there are thousands of different stocks that you could potentially trade, but all of those make up these 11 different sectors. Some of those include the financials, energy, real estate, utilities. So instead of looking for individual stocks within each sector, just like investing in ETFs that track the main indexes of the stock market, you can invest in these different ETFs that track these 11 sectors. So here's some of the different ticker symbols that track all of these sectors. And the concept here is exactly the same as investing in the S&P 500 or NASDAQ ETFs. Once you invest in one of these ETFs, you now have exposure to a ton of different stocks in that specific sector. Some stocks in any given sector could move up or down 10 to even 20% in a single day. So what that means is if you had $1,000 in a stock, that position could potentially fluctuate hundreds of dollars throughout the day. But since ETFs are a combination of so many different stocks, the volatility is much lower, and these positions tend to only increase or decrease 1 to maybe 2% every day. So for an investor who doesn't want to actively trade or take on that much risk on a day-to-day basis, this is definitely something to consider. And that's the beauty of investing in funds that are composed of many different stocks. Even if some companies end up failing and losing money, if you look at the bigger picture and see the sector's performance over 1 year or 5 years, they will still continue to increase as the winners in the index end up outweighing the losers and drive the index higher. And these 11 different sectors give you an opportunity to invest where you personally see value for the future, so that's where you can get creative. There's really no perfect way to invest your money as everyone has a different risk tolerance, so you really just need to find out what will work best for you. And I know the majority of this video was explaining some alternatives to stocks, but I'm not saying that you shouldn't mix stocks in your portfolio. You can definitely invest in different index funds or ETFs while also owning individual stocks. Say you wanted to have maybe 75% of your money in some low-cost index funds that'll track the S&P 500 and the NASDAQ, and then the other 25% you wanted to use for some riskier investments on just individual stocks that you saw some growth potential in, or maybe you just wanted to invest the other 25 in some big blue chip stocks like Apple or Amazon. Or maybe you wanted to split up your portfolio to invest in some of the different sectors. So maybe you wanted 5 to 10% in tech or healthcare or utilities. It's really all up to you. I think that the first thing you need to do is just identify your risk tolerance and then determine whether or not you want to be either active in the market or just be a passive investor where you're trying to consistently invest your money so that you can watch all these funds and stocks grow over time. All right, so that's it for this video. I hope you guys found some of that information valuable. If you did, make sure to leave a thumbs up and subscribe to the channel if you want to see more videos on investing and trading in the stock market. Thank you guys for watching, and I'll see you guys next time.